This is how to make money with day trading from this guy's kitchen.
Trade what you see and not what you think. Here's a good example. Let's say that there's support right here, right? And you're waiting for the market to come back to support to buy because you have a bullish bias. Now, the market comes back to support, right? Boom. Now you're looking to buy, but it doesn't show you any type of bullish action. And guess what? It cracks the support. And when it cracks support, it's going to basically turn that into resistance and keep going. But here's the thing. If you're not trading what you see, you're gonna say, man, forget that. I'm gonna still buy it. And you buy right here, you get stopped out. I'm gonna buy right here, you get stopped out. I'm gonna buy right here, you get stopped out. Guys, why are you trying to buy and you know that they just crack support? You have to trade what you see. So if you had a bullish bias in the morning and they crack support, then you might have to change your bias or not trade at all.
Now I agree with him, but the only problem is what you see changes based on how you feel. The difficult thing about trading is your emotions literally alter your perception, which causes confirmation bias, which is a very real thing. Or as this guy in the comments put it, this is a psychological form of wishful thinking. If you bought the stock and it keeps falling, you'll buy again because you're being emotional and your mind is refusing to be wrong. And yeah, this guy gets it, but it's even more than that. You're so disconnected from reality, your mind is literally imagining things that aren't even there. So should you actually trade what you see if what you see isn't accurate? Well, no, you'll lose. So instead of trading what you see, I would say trade what your strategy says to trade. There's another thing I think he missed. So let's replay this part right here.
There's support right here, right? And you're waiting for the market to come back to support to buy because you have a bullish bias.
My question would be why? But why do you have a bullish bias? See, he just sort of glossed over that. So what he's missing here, in my opinion, are two things. One, why? Why do you have the bias you have? And two, how? How does your strategy say to enter if you have a bullish bias and are looking to buy? They call this an entry signal. And an entry signal means you're using the data on the chart to inform your entry, not your feelings. It's data over feelings here in trading. And effective traders that do this for real are not just looking at the chart and trying to make a guess based on their feelings. They have a predefined way of interpreting what they see and predefined entry and exit signals that tell them specifically how to get in and out.
But it doesn't show you any type of bullish action. And guess what? It cracks the support. And when it cracks support, it's going to basically turn that into resistance and keep going.
Yes, but what if that's not what happens? What if when it cracks support, it's not actually a reversal, it's instead a pullback, and support does not turn into resistance? What about then, dude? We're just gonna leave that out? This guy gets it. Sometimes it's not a reversal though. It's just a pullback. Gator87, I like your style. And he goes on to say that there's been times since he's changed his bias because he was looking at the pullback and not a reversal, and that came back to bite him in the ass. Yes, exactly. In other words, you can't just assume once you crack support that automatically that turns into resistance, because that is not always the case, man. So the only answer here is that you have to be able to differentiate between a pullback and an actual trend reversal. And here's the thing.
When it cracks support, it's going to basically turn that into resistance and keep going.
The probability in most cases does not actually favor his example, a trend reversal. The probability in most cases actually favors a pullback over a trend reversal. But unfortunately, it's not as easy as just saying you can expect one or the other, because as I said, you have to know how to tell the difference between a pullback and an actual trend reversal, which he never explained and also never showed you how to do. So let's keep going with this, and I'll actually share with you how I actually go about doing that. Now let's take his drawing and overlay an actual real chart, okay? Enough drawings, let's look at a real chart. This is the S&P mini from today, actually. If we assume that support is the same place that he drew it, which would be right here at the prior high, and just the same, we crack the support line right here. But what does your strategy say to do here? Okay, that's the question I'm arguing is the most important thing here. Not just trading what you see, but what does your strategy say? Now, I don't know about your strategy, but mine says over here, we have a bull channel, a strong bull breakout, and a move up here, okay? And then we went sideways here for a while. And my strategy says that after a strong move up like this, we'll typically go sideways for about 15 to 20 bars. And after that happens, then we'll get another breakout in either direction, either to the upside for trend resumption or the downside for a trend reversal. So let's measure first. Yes, that's 15 bars right here. Okay, so now we have to assess whether we see that the probability is going to favor up, meaning trend resumption, or a trend reversal, which would be, in this case, a bear breakout down. And to do that, my strategy says, look for these signs, which are evidence of bear momentum. These are my trading rules inside my trading manual. If we see bear momentum, that means the probability favors down. And within my strategy, I am to use these points of evidence to help determine which one it is, either bear momentum or bull momentum. Now note that the same signs for bear momentum will be the opposite for bull momentum. Keep that in mind because our goal here is to compare them and see which one's stronger. Remember, it's facts over feelings in trading. So you have to have something to base your opinions on. If you just try and do this based on how you feel in the moment, it will likely not work. So using something like this, an actual list with actual facts to look for, is one of the ways that I rely on my strategy to save me from my feelings taking advantage of me and actually losing me money. So assessing this area for evidence of bear momentum. Can we see bear bars growing or shrinking? It's about the same, right? This is the same as this, and this is about the same as this. So bear momentum about even. And if we look at bull momentum, well, this guy is about the same as this guy, but then suddenly this one grew to about double the size of this one and closing near its high, closing above the 8 prior bars. But notice that we're right here at that key level. And as I said, we could look like we're reversing, but not. And notice that from here to here, a change happened. So the question I'm asking is, do we see the bear bars, which are black on my chart, growing or shrinking? Well, look, they were small here. Now they're big. Okay, so my strategy sees that as bear momentum. And what else? Is the second bear bar growing or shrinking? Growing, right? Second bear bar is about twice the size of the first. And how about the close? Both bars close near their lows. So that is another sign of bear momentum. This big bear bar closed below the prior 10 bars to the left. Compared to the other breakout, it was only closing past 8 prior bars. So now here is where my strategy says that we have bear momentum and the probability officially favors more down. Not based on my feelings, but based on the facts, according to my strategy and the predetermined evidence to look for, which then means that here is my signal to enter short. And my strategy says to put my stop loss above the recent prior high here, which probably most people are going to do. And then remember, I said predefined where to get in and out. So the profit target would be my exit, and my profit target would be a measure move of the distance of the bear breakout. Measured move being just an equal distance move, which we said was here. So if we measure an equal distance move, the measured move profit target would be here. Now let's see how it went. Okay, in this case, my strategy was effective and this made money. Awesome. But notice, it wasn't as simple as one or the other. You actually have to analyze the evidence and make a decision according to your strategy. Thank you for watching. Subscribe for more videos like this.